Hey, what's up everybody? It's the Crypto Ginger here. Just wanted to take a quick moment and put together for you guys several articles I found very intriguing. Of course, when I put them together, it actually shows this bigger picture of what's taking place almost at a rampant scale. And I think that, guys, things are actually starting to pick up as far as pace is concerned. A lot of it having to do with this huge debt crisis that is actually on a global scale. And of course, the talk of recession, and of course, maybe even a depression, just simply depending on how bad things actually get per country. And I know that the United States is most certainly going to be affected by whatever would be taking place when it comes to, again, some sort of upcoming recession. But I want to start off with this article here from trustnodes.com, where we see that Fed suddenly prints half of Bitcoin's market cap as money dries up for government bonds. Now, that title alone should actually scare you, but looking here in the article, what we can see is that the United States Federal Reserve has suddenly injected $53 billion in short-term lending markets by buying U.S. Treasuries and other securities for the first time since 2008. What happened after 2008? We had the crisis, we had the crash, we had the stock market take, basically a huge dump. The housing market crashed. I mean, so much was going negative after the ejection of all that money that actually went towards, trying to prop up the stock market back in 2008 and the housing market, and it just failed miserably. And of course, now we have, as a result, a $22 trillion debt. Of course, that wasn't all stacked on there at once. That's an accumulative amount of debt. But guys, we're dealing with more debt being injected into our markets. And of course, we haven't seen this since 2008. If history has a tendency to repeat itself, are we looking at another 2008 crisis? I would imagine we are. A little bit further here in this article, what we can see is that they are to print another $75 billion today. And of course, this article came out on the 18th. So depending on when you're actually seeing this video, guys, that $75 billion is already in the market. And of course, that is just additional debt going towards, buying U.S. Treasuries. This right here is very scary when you start seeing things on a broader perspective here. And of course, what we're seeing as far as what Bloomberg has talked about when it comes to this injection of money into buying U.S. Treasuries. Basically, Bloomberg says there is often not enough cash on hand at major Wall Street firms to meet the funding demands of a market trying to absorb record Treasury bond sales needed to cover U.S. budget deficits. So what do? You just make more money out of thin air to try to prop it all up. So it's just a very interesting process here, guys, that we're seeing when it comes to the possibility of an upcoming recession. And interesting enough, there's definitely talk in the news about the fact that the Federal Reserve could actually push Bitcoin to 20,000 or more. And this is actually coming from BitMEX's CEO. So I think really the title of this article here from EthereumWorldNews.com kind of says it all here if you want to take a quick look at it and get a firmer understanding outside of what we just referenced between, that previous article here, talking about, again, the Fed injecting $53 billion and now an additional $75 billion. That's absolutely absurd. Of course, we're going to see some negativity take place when it comes to the entire market because you're taking, again, more debt and trying to prop up the system, which would absolutely lead to something as far as an increase in what other people are going to consider a safe haven like precious metals and cryptocurrencies. So yes, Bitcoin would absolutely... So yes, Bitcoin would absolutely be affected by this in a very positive manner. And I would imagine every single one of those other cryptocurrencies would be affected by this in a very positive manner just as well, because this would be, as far as this entire cryptocurrency ecosystem, would be considered some level of a particular safe haven. Now, I would imagine traditional stock market brokers and, of course, those who are day traders in precious metals and stocks would probably resort to precious metals because that's what they're used to. But That's not to take away from the fact that cryptocurrencies and digital assets are around, and they are just another means for people to actually invest in. So guys, let me know what you think about this information here. I know that this was a little bit long-winded. I just wanted to make sure that we were all on the same page as far as understanding what has just recently taken place, all the news regarding, the back and forth bantering between Trump and, of course, the Fed regarding lowering or, increasing interest rates. It's just a back and forth drama show at this point in time, and what is the true thing to pay attention to is really the actions that are happening. And this right here, guys, again, seeing money being injected into this entire market system to prop it up again is extremely scary, especially if we haven't seen this or the likes of this since 2008. So you'll have to let me know what you guys think about this information. A couple other things I want to quickly go over to show you again part of this bigger picture of what's happening on a global scale. Now, before I go any further, I will say that I think a lot of these countries around us that are getting themselves immersed into the cryptocurrency ecosystem, whether it has to do with blockchain or distributed ledger technology, and or involving themselves in cryptocurrencies or a stablecoin, a lot of these countries are now becoming very outspoken the moment they heard anything from Facebook and their creation of the Libra stablecoin. Again, the timing is perfect when it comes to what's happening right now. And of course, we have an article here from CoinDesk talking about how Germany passes national policy to explore blockchain but limit stablecoins. And a lot of this simply has to do with the fact that they do like the fintech side of this cryptocurrency ecosystem, but the cryptocurrency they're not actually in favor of, especially stablecoins, and more importantly, especially the Libra coin. Now, what we can see here is that approved by Chancellor Angela Merkel's cabinet on Wednesday, basically the government of Germany's priority in blockchain space is to deal with things such as digital identity, securities, and corporate finance. You can even see that highlighted here where they're going to be taking the approach of exploring identity, smart machines, smart contracts, faster securities, tough on stablecoins just as well, especially again with Facebook coming out with their Libra stablecoin. So really seems like Facebook came out as a very big threat to a lot of these nations, a lot of these countries, and it's not just Germany. I mean, there's a significant amount of countries that have expressed their disdain for Facebook's Libra coin. They've even gone to express their disdain for Bitcoin and other cryptocurrencies right alongside of, for example, the President of the United States, U.S. Senate members, U.S. Congress members. I mean, it goes on and on because a lot of these nations, a lot of these big companies and entities and people that deal with a lot of wealth and capital of the world, they don't want to feel threatened by a new technology like blockchain and distributed ledger technology and cryptocurrencies and digital assets, and that can be a real threat, especially when you hear the likes of some sort of recession right around the corner. And something to keep in mind, guys, like I said before, there are most certainly people that believe in the crypto side of this entire fintech industry and what's happening outside of blockchain technology and distributed ledger technology. So keep that in mind. We also have an article here from Cointelegraph.com explaining that 32% of Europeans believe in crypto and also believe that it is the future of e-payments. Now, interesting enough, when it comes to these type of statistics, you have to keep in mind, guys, that vast majority of the world still doesn't even know about cryptocurrencies, let alone Bitcoin. And I would imagine that, that's going to expand all throughout the entire European nations. So if we were to break it down to say, hey, how many European nations actually have a firm understanding of cryptocurrencies and Bitcoin? All right, now out of that small handful of people, 32% of those are actually going to believe that crypto, again, is the future of e-payments, just simply because, again, not many people know about cryptocurrencies or Bitcoin, and of course the idea that they could be utilized as a form of e-payments. And then you combine that with the fact that there are those in the EU that think that their own digital euro coin needs to be created to compete with Facebook's Libra stablecoin. That should tell you everything you need to know. Guys, as soon as Facebook came out and said, hey, we have this Libra stablecoin white paper that we want to share with everyone, I think that was basically them saying we're creating this stablecoin regardless of whether you like it or not. It's going to go through, and they have not stopped on that. They haven't stopped on production, even when they had people from the U.S. Senate and the Congress spouting against it, saying, "Hey, you need to put that to a halt." They didn't. And of course, now we're seeing all of these countries looking at not only blockchain and distributed ledger technology, but they're looking at cryptocurrencies as a way to combat the Libra stablecoin. And of course, with the EU again looking at possibly having maybe their own Eurocoin created, now we're seeing the likes of North Korea creating their own cryptocurrency. For example, we have North Korea right alongside of several other countries developing their own cryptocurrency. And of course, North Korea, I think, put it the best as to why they're creating their own cryptocurrency. And I think the sentiment is shared with a lot of other countries just as well, and that is to avoid international sanctions and circumvent the US-dominated global financial system. Guys, that right there has been one of the most major talking points that I've been hearing from cryptocurrency news outlets in regards to other countries that are taking this approach of looking at the blockchain side of things or the distributed ledger side of things. But more importantly, when they're looking at stablecoins or cryptocurrencies in favor of their own country, it's because, again, they're looking to avoid international sanctions and circumvent the US-dominated global financial system right alongside of the US dollar. They want no part of it any longer. So that should tell you as much as you need to know when it comes to what's happening with this economy, this global debt that we're dealing with, and of course all of these countries trying to find some way to avoid a big crisis if there is basically some sort of recession, global recession, to take place. I don't know what else to say when it comes to this kind of information other than you are really going to have to just keep your eyes and ears out for seeing this news every single day. It just keeps telling you the story of what's going to unfold. And if anything, if this entire system falls apart like it did in 2008 when it comes to another spectacular crash in the market system and the housing system, I don't think it's going to be just something soft and something easy and we're done with it and it's over with because it got propped. I think this is going to be really big. I really do. I think it's going to be something that puts a lot of people out of business, a lot of people out of homes, a lot of people out of jobs, a lot of people out of money. And, you're going to start seeing people trying to find a way to, keep their money where it's actually gaining some sort of wealth or being stable, if you will. And cryptocurrencies offer both of that. They offer a way to gain value or a way to remain stable with these different types of stable coins or cryptocurrencies that, yes, there is some volatility in market, but volatility and knowing that there could possibly be more money piling into this ecosystem because these fiat currencies are being created out of thin air by the Fed and being injected into the markets to prop them up. Guys, it just does not end well when it comes to seeing this, seeing history basically repeat itself. I'm going to leave it at that, guys. There's a lot more information out there. And, of course, I'm going to try to get more videos out as much as possible and as fast as possible. But, guys, again, keep your eyes and ears out for as much of this information because it is definitely ramping up. Things are happening in this entire ecosystem that I didn't know if they were going to go as fast as they are. And it feels like almost like a coil being pulled and tightened all the way down until it has to release. And, of course, once that happens, guys, it's no telling how far it will actually explode out. And once that does happen, that's where all the fun starts taking place. You start seeing a lot of the craziness happening in this entire world, this entire ecosystem. So let me know what you guys think about this information. Be on the lookout for another video here, guys. Again, there's an abundant amount of news, and I'm going to try to get that out to you guys as quickly as possible. If you are new to this channel, please hit the like and subscribe button. And thank you again for watching, guys. Have a good night. Bye-bye.